The government was able to create huge amounts of new money, dump it into the banking system. The banks would give that money to their preferred customers who were already rich. So they didn't go to the grocery store and buy more food because they're already eating as much as they wanted. They already have their cars, but they took that money and they put it into stocks, bonds, and real estate. Those things soared. So we had massive inflation, but we don't count that as inflation. We think of it as our assets going up, but it is actually rich people getting richer. Now, we're seeing the flip side of that. Regular people getting poorer because they can't afford life's necessities. The emperor clearly has no clothes now, and everybody knows it. Like you said, it's common knowledge that everybody knows. and that's what's going to change the dynamic now, because it's going to be much harder to fool people going forward. And if people can't be fooled, they're going to act intelligently. They're going to act with knowledge, and that's going to be very destructive for the fiat currency matrix.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always privileged to have this returning guest, John Rubino, the founder of DollarCollapse.com, and now with his own Substack account that we're going to find out more about, joins us this Thursday, April 13th, 2023. John, thanks for coming back on Liberty and Finance.
Hey, Dunnigan. Good to talk to you again.
You've been very prolific in your writing recently, and everything you write makes me think, how does he know so much about that? How does he know so much about that? How does he know so much about that? So clearly you're doing a lot of reading and digging and researching in many areas of interest, but you've got a way of summarizing and pulling things together in a way that makes them so accessible and easily understandable to the ordinary person that I have to have my hat off to you for that, because I think it's so important to reach people and let them know what's important, what they need to know. And we're getting so little of that, or we're getting the exact opposite of that from many of the outlets that are more accessible. So, kudos to you for what you are doing, and asking you here if you could elaborate on your most recent research you've done. And you wrote an article called Gold's Quiet Bull Market. And I think that that's one of the things that a lot of people are wondering about. They've said for years, gee, if things are falling apart as badly as they are with the dollar and the markets and the banks and everything, then why aren't gold and silver going up more? And that's a fair question. If gold is supposed to be the canary in the coal mine that tells you something is wrong, has it been telling us that? Why is it we haven't been hearing about that from most outlets, etc.? So what have you been looking at that caused you to write this article, Gold's Quiet Bull Market, and what do you think it means?
Well, first of all, it's nice to finally see it. But it has been a long time coming, because gold was last sustainably this high in 2011. It had a couple of spikes that got up there since then. But mostly it's been a boring, not catastrophic, but kind of grinding stretch for gold and for silver, more so for silver, really. But the fundamentals were always there. I mean, we were always borrowing insane amounts of money and creating way too much new currency and causing booms and busts of increasing amplitudes. So there was never a question that we were going to get to a place where a bust was so big that the required bailout would then be commensurately big, and it would cause a currency crisis, which would lead to a big jump in gold and silver in response. That was always coming. And we kind of sort of had that with the pandemic, where that was, our response to the pandemic created such a global crisis that we had to increase the money supply in the U.S. by 40%. And that gave us inflation, inevitably. And that gave us higher interest rates, which is now in the process of giving us a recession this year sometime. So that kind of uncertainty was always eventually going to lead to gold and silver going up. And so it's finally happening. And the only philosophical thing you can draw from this is that things in life take a lot longer than you expect normally, as you found with your move to a new house lately, probably. But I wouldn't read all that much into why it's happening now, except to say that it should have happened all along. And the reason it's not very exciting yet, even though gold set a couple of all-time records, gold had its highest monthly and quarterly close on March 31st. And normally all-time records generate a lot of buzz, but that hasn't been the case this time because I think people are just so beaten down by expecting gold to go up and expecting it to go up, and it may be going up a little bit, but then going back down. It's been a really disappointing long stretch for gold bugs and for precious metals miner investors. And all I can say is it was always going to happen, and maybe this is it. But what's happening right now is very encouraging because gold is up. It's creeping up on its all-time daily high. Silver is way down from its previous highs, but it's rising faster than gold is right now. And the mining stocks, at least the higher quality mining stocks, are ripping right now. They're going up dramatically faster than gold is. And that's a sign of some awakening animal spirits in the market. So it could be. And again, you never know what's going to happen 3 months or 6 months or even a year out. But it could be that this is the beginning of a bull market that will be notable because all the numbers are so big. It won't be, in retrospect, a surprise to see gold and silver go up dramatically. Just because the amount of debt, the amount of currency, all of that stuff that normally form the fundamentals for precious metals are so outrageously overdone. And so we could easily see a nice long run from here in gold and a bigger, more serious run in silver, just to get silver back to its all-time high. Silver almost has to double to get to its all-time high from here. And that will not be a surprise at all, at least in retrospect, after it happens.
You covered several topics there. I want to kind of peel back several of them. One is you talked about these new monthly and quarterly closes at all-time highs for gold at the end of March. We recently interviewed Michael Oliver, who looks at structural momentum analysis and also looking at other forward indicators rather than just at lagging indicators, because some people wait till they see whether it's stocks or anything breaking out above 200-day moving averages or 50-day moving averages, things like that. And those, by the time that happens, you're far from the turning point, and he tends to look for what are indicators of the turning point and that will eventually result in those final price breakouts and that kind of thing. And his latest comment was that all the lights have turned green, where all systems go now for gold and silver, that there's nothing yet that they're waiting for. They have all the indicators that they need from a forward-looking basis for a sustained rally in gold. That's point number one. Point number two, just talked with Michael Pinto, active money manager, and he reflected on this may be somewhat different from the cycle that we've seen in the past, because in the past there tends to be, when you're looking at recessions and rolling over of equity markets, stock markets, that kind of thing, that there tends to be like a rush to safety into cash liquidity, and that usually results in a sell-off of anything that has a bid. It usually means stocks. It also means precious metals in any case. And so you'll see an initial sell-off and a dip before you'll see a climb out when people finally realize that there is only really one safe haven harbor, I guess besides productive farmland and in precious metals. But he talked about maybe this time we won't see that because we're against this interesting backdrop of a looming crisis in the banking system that's, is showing cracks around the edges, several bank failures. We've talked about that with you before. You said it's not over yet, and he said that as well. There's just so much going on that people are starting to be aware of as far as concern with the dollar and concern with the bank, so that the normal reflex rush to safety of the dollar and the banks, putting your money into savings or checking, that kind of thing, may not happen this time. We might just go straight into the gold and silver launch, as seems to be potentially the case. Any reflections from you on either of those points, either that perhaps all the forward looking indicators are in fact in alignment now for a sustained metals rally, and also whether we should still be, as many clients who call me are looking for, a really good pullback so that they can get on the train before it leaves the station. Any thoughts from you on whether that may or may not happen this time?
Yeah, two thoughts. One, Michael Oliver. Normally, I don't really pay too much attention to technical analysis, but he's a special case because I've been watching him for years. And, he was a regular on Jay Taylor's show for a long time, too. And he's been pretty consistently right, even when he was temporarily wrong. He would say something was going to happen and it didn't happen right away, but he stuck to his guns and it eventually happened. I've seen him do that quite a few times. So I respect his analysis, and I respect it so much that in the Substack article I just wrote on gold's bull market, I posted your video with him at the very bottom. I left people with that video because it's exciting to see this guy with credibility saying, that's it, I'm as bullish as I can be on gold and silver. Now, Michael Pinto is absolutely right that if there's a problem with gold and silver right now, it is that there's a big problem with the rest of the economy. We're heading into a recession one way or another. We got all kinds of stuff going on in the banking industry. And normally that brings an equities bear market that pulls precious metals down along for the ride. So that's the big risk for precious metals, is that you get another 2008 or 2020 when gold and silver and the mining stocks just get crushed. But it's a V bottom and they rocket off that bottom. But still, if you're along for the ride, you just lost some sleep for a couple of weeks there. And so that, to me, is what would keep someone reasonably from jumping in with both feet into precious metals right now, because that thing is out there looming, or at least the equities bear market is looming. And the question is, what does it do to precious metals? And I also think Michael Pinto is probably right this time, that there are different factors at work. And like you said, the banking industry is right on a knife's edge right now. They had a mini crisis that the government stopped by basically guaranteeing all bank deposits everywhere in the U.S. It was a really major gesture that they made, but that stopped the carnage. But it's not over yet, because especially small banks like regional and community banks own a lot of commercial real estate. And commercial real estate has the same structural balance sheet problems that those small banks have, because a ton of buildings went up in the last 10 years, financed with trillions of dollars of extremely cheap debt. And now a lot of that debt has to roll over. And those buildings are, because office buildings have very high vacancy rates because everybody's still working at home and there was overbuilding. So they're not worth it. They're not worth refinancing right now. So a lot of them are going to have to be sold, and they're going to have to be sold at massively lower prices. Wolf Richter's doing some really good work on this. You should check a couple of his articles out if you haven't seen them, where he tracks sales that have happened in the commercial real estate market. And there are literally $400 million buildings having to be sold by a distressed owner for $178 million, things like that. Drops of that magnitude are happening in a lot of formerly hot markets. Now, the banks own a lot of that paper. So if commercial real estate rolls over, then that's going to impact those same banks that had a near-death experience a month ago. And when people started worrying about the safety of their banks, they pulled a lot of money out, a lot of deposits out, and some of that money went to gold and silver. So there was a flight to safety, which explains in part why gold and silver are going up right now. So let another banking crisis hit, this time because of commercial real estate, and you'll see a flight to safety on a bigger scale, because once banks are reporting shocking quarterly losses because their real estate portfolio, blah, 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 that whole thing, people are going to wonder which bank is safe, whether their bank is at risk, and what's going to happen. Will the government have enough money to bail them out? And what will happen to the dollar if the government does bail everybody out? Because we're talking several $trillion. So we could see a flight to safety into gold and silver. At the same time, we're seeing a crash in the equities market brought about by commercial real estate tanking. That's a completely possible scenario, with precious metals benefiting from people just being terrified and equities suffering from the same mindset. So that could happen. It hasn't happened the last couple of cycles, but this time, because the banking sector is so at risk, it could happen this time. So that's a reason not to sell all your gold and silver in anticipation of an equities bear market taking precious metals down. So I still wouldn't recommend you put 80% of your money in precious metals, although I'm not far from that. But I wouldn't recommend that most people do that. But I also wouldn't recommend bailing on precious metals to try to time this market either. So this is there are reasons to worry. There are reasons to be very optimistic. And always remember that the long-term story for gold and silver is phenomenal. It's a rocket ship at some point, and we just need the right conditions and the right point in the next crisis and the right government actions, all of which we'll see. And the question is that a this year thing, or is that a 3 years from now thing? And I wouldn't venture a guess. But I think eventually a lot of big money will be made in shorting a lot of today's high-flying financial assets and in owning alternatives to the big fiat currencies like gold and silver. That's really your play: real assets and big tech shorts and things like that. So that's what I'm sketching out there is kind of a sophisticated portfolio, because shorting is tricky. But and picking the right gold and silver mining stocks is tricky. But if you've got a good advisor who can help you with that, there's a chance of life-changing money for people who get this play right. The long and the short of it over the next few years.
One of the aspects that is baffling, as you pointed out, about even being in the right place or seeing the right trend, is the timing aspect. And part of that, I believe, is whether you call it cowardice or malicious or kicking the can or whatever, there are definitely actions that have been taken and are being taken both in the past and presently that seem to be, in fact, just kicking the can down the road with, in some cases, an eye to human nature, thinking that if people don't see something happening in real time, they won't connect the dots between the cause, the actual guilty party who did the action that set up for the failure versus the actual eventual failure. That if they can separate those in enough time, people just don't see the connection. We've heard for decades and decades various what were referred to as conspiracy theories, where people put out saying, I think this was done by those in power and not the official story that was floated out there as far as what happened. And then it turns out decades later, the truth starts eventually leaking out. We got Freedom of Information Act release of documents. We got finally find out whether it's the Tuskegee experiment, whether it's about assassinations, whether it's about whatever. We find out decades after the fact, oh, that really probably is what happened, or it really was what happened, is documented. More recently, we've even had in the last year, 2022, if people saw that their paycheck had all the federal taxes deducted by their employer or whatever, and then at the end of the year they meet with their accountant, and the accountant says, yeah, you still owe a bunch. It turns out that the IRS changed the withholding tables throughout all of 2022 so that people were receiving more in their paychecks all last year than they otherwise would have. And so they owe more at the end of the year than they otherwise would have. So there was this feel-good effect, hopefully to stimulate the economy or whatever, throughout all of 2022. And now you have to pay the piper, but will people see the connection there? And more recently now, you said banks may be getting stressed beyond their breaking point, the most recent near-death experience because of the upcoming and in-progress failure of commercial real estate that they have on their books becoming toxic. But if they can show up at the Fed's new window and present those toxic assets and redeem them at face value and kick that can down the road for a year, can we keep deferring the actual pain that should come immediately when these bad things happen because of these actions being taken to provide these one year delays in basically the day of reckoning?
Yeah, they've been lying to us shamelessly for decades now. And I think a growing number of people are starting to, because once you see one lie, then you're open to the idea that there are others out there. So people only need to be fooled one time and realize they've been fooled to become conspiracy theorists. And I think that's a growing subset of the population right now. And yeah, they can use the monetary printing press to convince people that things are basically okay forever, as long as the currency holds up. See, that's really the linchpin. And what happened with the latest attempt to fool us, which was in 2020 to 2022, basically, was that we created so much new currency in the process of trying to fool people that it caused inflation that they couldn't hide. They could not lie about inflation, although they probably did with their official numbers being lower than the actual number. But when the official number is 8.9% on the CPI, that means real inflation is probably 12 to 15%. And people experience that in their real lives. So all of a sudden, the currency is a factor now. We depreciated the dollar by 10 or so percent last year. And people know that. They felt it in their own lives and their families' finances. So we know that's a possible consequence of a big bailout. So the question next time, say they decide they're going to start buying commercial real estate and the government becomes the landlord in a bunch of cities for office space, and it costs them $1.5 trillion. Let's say they do that. Well, back in the good old days when we were easy to fool, people would have gone, wow, they solved the problem. The government's got our back. Now they're liable to say, oh, they're going to generate another double-digit year of inflation, which means my family's barely going to be able to put food on the table, and I might not be able to drive to work. I hate these guys. That it could be something very different than what the government's hoping for, in other words. And if that's the case, then our finances are going to be very different going forward. We won't be trusting the government to maintain the currency, and we won't keep massive amounts of dollar cash in bank accounts and money market funds and under the mattress. We'll want to put our extra cash in other things. So that lack of trust in the government, which is growing and might reach a critical mass in the next bailout, is, that's the precious metal story right there, that we are going to lose faith in the guys who are running everything, including the currency. And when that happens, we'll act accordingly by getting out of that currency. It's the Austrian economics crack-up boom, basically. And we're getting closer to that because we had that year in very recent memory when the dollar was no longer trustworthy, when it was falling at a scary rate. And that could easily happen again because it just happened. It's our reality now. So I think that's a very possible response to the government's next big bailout, which will come when some other big sector of the economy blows up. I brought up commercial real estate, but that's not the only one that's possible out there. It could be the whole de-dollarization thing, where countries start to bypass dollar hegemony and the U.S. military empire and start trading among themselves. You just saw, I think it's headlines right now, so it could have been today or it could have been yesterday, that the president of Brazil said, we need to start using other currencies for our trade and just stop using the dollar. He just came out and said it. So these guys aren't afraid of us anymore. And the president of France said that a couple of days before, where he said we need to get away from having the dollar be the only currency for trade out there. Nobody said things like that even 6 months ago. So let that become a trend. Let de-dollarization become a headline.
Or putting it a little bit differently, those national leaders who did say things like that for the last several decades aren't with us anymore.
Yeah, well, that's why they didn't say that stuff, because we either destabilize their country via the CIA, or we just flat out killed them. And I'll say it. We are seen by most of the rest of the world, with good reason, as kind of a malevolent force in the world, as kind of an evil empire. And you don't lightly speak out against an evil dictator, right? Like you said, a lot of people have found out why you don't do that. But it's very telling now that a lot of people no longer have that fear. And once downtrodden people lose some of their fear, they become ungovernable. And that's kind of what's happening in the monetary world right now is a lot of countries are working out bilateral trade deals where they just trade with their own currencies with each other. Or they're talking about forming a competing currency to the dollar and backing it with gold, maybe. All of that stuff is being discussed out there. It's not a real thing yet, but the fact that it can be openly talked about and openly planned, and the BRICS coalition, Brazil, Russia, India, China, and South Africa, can openly solicit new members, and potential new members can line up. There's maybe 15 other countries that want to join the BRICS coalition, including Saudi Arabia. So this is a very big change, and it's just this year. It's a completely new thing. And we don't know what that's going to mean, but it potentially adds to the pressure on the dollar as other countries who don't normally or who normally trade in dollars stop doing that and don't need all those dollars anymore, and they dump them on the market. If that leads to a drop in the dollar's exchange rate, which in turn leads to higher interest rates to protect the exchange rate of the dollar, then we've got a financial crisis here that. Who knows where it goes? We can't handle higher interest rates, so we don't have that tool, but they may feel like they have to use that tool. Who knows? This is a new chapter in monetary history, and it's got the potential to be the final chapter of the fiat currency experiment and send us into that currency reset that Jim Rickards has been talking about for a while. So, yeah, interesting times, and a lot could happen in the coming year.
Two aspects of what you just said I wanted to respond to. One is that idea that in the common knowledge, in the populace, there's this recent understanding of what it feels like, how it hurts the ordinary person to have price inflation and the devaluation of the purchasing power, that what they've given up part of their life for to work and earn, that if they're holding on to, even if they're holding on to paper dollars, that they can't buy as much now as they could a year ago. The buck ain't worth what it used to be. One person wrote an article on that talking about what is common knowledge, and they said common knowledge is when everyone knows that everyone knows. Like the story of the emperor having no clothes on. Everybody knew, but they thought maybe they were the only one. And then when the little child finally shouted out, "The emperor, he doesn't have any clothes on," then instantly everybody knew that everybody knew. And that's when it becomes common knowledge. And one example of that came to mind, and maybe you'll point out some others, about price inflation is the number of establishments, maybe restaurants most noticeably, but there's probably others, who had to put up signs on their menus or on their front window or whatever in the most recent 2 years saying, due to events, we're going to have to add a surcharge here, or we're no longer going to have the bargain special of the day lunch anymore. The lunch prices are off the menu anymore, but now we have to add a 7%, 10%, whatever it is, surcharge to your bill. Although we're trying to maintain our low prices, but that's what we have to do, is these surcharges. Anything besides that comes to mind to you that's an example of this price inflation and destruction of the purchasing power of the dollar being common knowledge, where everybody knows that everybody knows?
Well, the thing about retail inflation is that everybody knows it firsthand because they experience it. For instance, I'm our family's Costco shopper, which means I know the unit price of a whole bunch of things that I've been buying for years, and I've been watching them go up. And so I know what's now 60% more expensive than it was 3 or 4 years ago. And there's a bunch of things that fall into that category. And if I know it, half the country knows it, right? So we've all seen it in our own lives, or we've heard our designated shoppers complaining about it and demanding more money, So I don't think there's anybody who didn't get that we had massive inflation in the last year or in 2022. And we're still having some, but it's tailing off now as the economy slows down. But that's why it was so important, because we've always had inflation, but it's been narrowly focused into financial assets. The government was able to create huge amounts of new money, dump it into the banking system. The banks would give that money to their preferred customers who were already rich. So they didn't go to the grocery store and buy more food because they're already eating as much as they wanted. They already have their cars, but they took that money and they put it into stocks, bonds, and real estate. Those things soared. So we had massive inflation, but we don't count that as inflation. We think of it as our assets going up, but it is actually rich people getting richer. And now we're seeing the flip side of that. Regular people getting poorer because they can't afford life's necessities. So I think the emperor clearly has no clothes now, and everybody knows it. Like you said, it's common knowledge that everybody knows, and that's what's going to change the dynamic now, because it's going to be much harder to fool people going forward. And if people can't be fooled, they're going to act intelligently. They're going to act with knowledge, and that's going to be very destructive for the fiat currency matrix.
Well, there's a couple aspects of that then, that people who are concerned about systemic risk, that sort of thing, to the financial system have typically done a flight to cash for safety. But in this case, do you believe that awareness of the destruction of the purchasing power of the dollar will mean that people will in fact figure out that cash is not the place, that cash is trash from a standpoint of preservation of wealth?
Well, people just saw their cash lose 10 to 15% and maybe more, depending on their specific set of purchases, right? So they know. They know that cash is not a store of wealth to the extent that they thought it was. I think that's already happened, which means that the next hint of rising inflation, people are going to remember what they wish they'd done at the beginning of 2021 or whatever, which is not hold so much cash because it didn't hold up very well, and get into things that did well. If you need a car right now, you're wishing you bought a car in 2019, right? Because cars got incredibly more expensive. If you need a house right now, you wish you'd have taken all your cash and put together a down payment and bought that house before it went up its final 30 or 40%. So people learned that lesson. They remember it. And so they're very open to a sales pitch from somebody like a gold dealer. It's much easier for you now to tell a story that resonates with your customers because they've already experienced the downside of ignoring what you're telling them. And so they're open to learning. And so I imagine that Miles Franklin is having an easier time explaining what it is they do to people now, because people they know at least one side of the story, which is the dollar can't be trusted to maintain its wealth. And so the next time there are headlines that say double-digit inflation on the way, stuff like that. As soon as that happens, they're going to act. And so we're going to see a mass exodus from financial assets and into real things because people regret missing the opportunity they had in the past, and they won't make that mistake again. So yeah, we're in a learning process that is, is going to be very consequential, and it's going to be a very big deal for asset allocation, because it's not going to be people doing the same thing. It used to be buy the dip was the lesson that everybody had learned. And a lot of people still believe that lesson, that when stocks go down, they buy stocks. If they need a house, they buy the biggest house they can, especially if prices have ticked down by 2% in the last 6 months or whatever. That may not be the lesson that people took from the experience of 2022. So it'll be a different lesson, and it might be a lesson that makes them a lot harder to govern for the people trying to fool them.
One more thing about cash before we leave it, and that's the pressure for a cashless society to consolidate governmental control, et cetera. It's not just in the U.S., it's all over the world. Ironically, my wife and I, having just moved to Florida, attended yesterday afternoon our first hurricane preparedness awareness meeting. And they said, hey, be aware that if a major storm knocks out the power for not only several days, but potentially several weeks, that all of the ATM machines, all of the point of sale transactional machines in all of the stores, if the stores are even able to open during daylight hours, there'll be cash only sales. So might want to have some cash on hand for that kind of an eventuality. It's like, well, that's interesting, because it seems like all the official pressures are going where there'll be no cash. In fact, just this week, there was an announcement from several major Australian banks that they're closing down their cash processing divisions so that many of the largest Australian banks will not be doing cash transactions at the tellers anymore. So how do you view the trend, the macro trend of the pressure towards a cashless society and where that takes us versus this need to have something that with which you can do your business, do your emergency food, fuel, rides, repairs, that sort of transactions in the case of a pinch?
Well, okay, three things here. One is, why is it, do you think, that Australia, New Zealand, and Canada are leading the way into an authoritarian future? You know, those are really unlikely countries based on their past history to be the fascist vanguard out there. I can't explain that, but it's strange to watch it. The second thing is that in a crisis that shuts down the banking system, the people doing your preparedness seminars are right. That'll make a shortage of cash, a temporary shortage of cash. And you want some cash on hand for that because that's instant liquidity. And if nobody can get cash out of their ATMs and they desperately need to buy something, all of a sudden, you have something they want and they're going to be willing to pay up for it. So you'll be able to trade cash for real stuff for the week or two after a crisis that shuts down the banking system. So yeah, you do want some cash for instant liquidity. But at the same time, gold and silver will almost certainly be seen as higher quality cash. So if dollars, if $20 bills are buying a lot, then a gold eagle will buy a lot more, and a silver eagle will buy all kinds of things. The gold eagle will be like a $10,000 bill, and a silver eagle will be like a handful of 50s or something like that. So you absolutely want cash on hand, and you absolutely want gold and silver coins in a place you can get to them in a crisis. And that's basically how you survive, other than the other prepping stuff. Obviously, you want water and some food put away, and you definitely want to be well armed in that kind of a situation. So all of that stuff is true. All the basic prepping stuff is true. And the financial side of it is cash, gold, and silver. And I think that's always true in crises like this, but I think it becomes more true as time goes on because the governments are going to actively try to destroy cash. Like you said, they might use that crisis as an opportunity to impose a Fed cash, a central bank digital currency or something like that. And if they do, then that's wildly inflationary, and if somebody's forced to use that currency and they have no choice and they don't trust the government to begin with, they're not going to want to use that currency. It's not going to maintain its value very well. And I think a central bank digital currency is just inherently wildly inflationary. So to the extent that they try to impose it, to the extent that people oppose it when it happens and try to resist, that's also good for the gold and silver story because that's the stuff the governments can't mess with, gold and silver. And their value will rise relative to whatever else the government is trying to sell us as the next currency. It's going to be a very rocky road to implement something like that. And that's, there's a scary side to that story because if they have trouble doing it in normal times, imposing a central bank digital currency, then they're liable to engineer some kind of a crisis that allows them to have martial law and to suspend civil liberties for a while, even if it's like the last couple of years here. They stretched out the crisis of 2020 to 2022-ish much longer than they had to. It never had to be a crisis in the first place, but they stretched it out. And part of what I think their rationale for that was that it was a test run. How easy is it to control us? And they found out that for about 40% of the population, it's really easy to scare them into allowing themselves to be controlled. So that was a useful test run, and we'll see a variant of that at some point in the future, almost certainly. They're not going to take the knowledge they gained from this and never use it. They're going to put it to good use from their point of view at some point in the not too distant future.
Yeah, to quote a high-ranking government official recently retired who will remain unnamed, the research is worth it. So anyway, that was interesting research that was done on us. And Ron Paul at his Peace and Prosperity conference in Washington, D.C., talks about the U.S. government as the mafia with a flag. So appealing to our patriotism or our innate sense of trying to do the right thing for the good of the many or something like that, but they could just about accomplish anything that's antithetical to our Constitution, our Bill of Rights, or our freedoms, or our privacy, or whatever, in the name of those things, because we're so easily manipulated on average if they push buttons of either patriotism or do the right thing and don't be selfish. And in the name of that, we can become impoverished and slaves. But unless we're awake and communicating about it, and that's why we're here. That's why you're on Substack. Could you please tell people how they can find you on Substack and plug into that amazing frequent writing that you're doing there?
Yeah, my Substack newsletter is at rubino.substack.com. And speaking of Ron Paul, by the way, over the weekend I have a series called People We Should Know, where I profile people who are really useful in explaining the basic things we need to know going forward. And I did a piece on Ron Paul, although I don't think very many of my subscribers need to be told who Ron Paul is, so it was more of a homage, just a note to Ron Paul, letting him know that the world would be a better place if we'd all voted for him in the last few presidential elections, and showing some videos of him as a fully formed person, almost from birth. There are videos of him when he's a young man talking about the same stuff he's been talking about all along. Why the Second Amendment is important, why governments can't be allowed to control the currency, why the Fed should be ended, things like that. He was saying that in what looks like his 20s. So anyhow, that's the kind of stuff I cover on the Substack. And the focus is actionable information. In other words, we kind of get that the world is going to hell right now, but what do we do about it? So we're building stock portfolios and looking at strategies like, how do you short things? And how would you short Japan, for instance, if you think their finances make them deserving of being shorted? And so far, so good. There's a community of people there who really are interested in what the perfect gold and silver mining portfolio is, et cetera, et cetera. So far, so good. It's working out well. Well,
John Rubino, formerly head of dollarcollapse.com, now on Substack, thank you for joining us, as always, on Liberty and Finance.
Thanks, Dunnigan.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.